All right, folks, welcome back. This is our weekend commentary for the ICT mentorship. And this is the dollar index. Okay, so the dollar has not really moved around too much. It's stuck in this range between the low here and the high. We did trade up into consequent encroachment of this gap here. Broke down. I mentioned that I'd like to see it get below the volume imbalance. Once it gets below and come back up and act as resistance, that would, in my mind, offer more confirmation for continuation on the lower. I prefer that scenario, so this has just been consolidation in my opinion. What could be taking place, and I just don't see it, or I'm misinterpreting it, or I'm reading it wrong, they may have something go off this weekend. Over the weekend in Canada, there may be something that goes off in Ukraine. All those things are like boiling pots, okay? Pots of boiling water. Eventually, one of them, if not all of them, are going to boil over. And it's going to create a lot of attention and concern, and it's going to spread. Whatever they see getting done in one country, it's going to inspire other people. It's kind of like when people riot. One state in the United States starts to show riots and such. In another state, they'll start carrying on and rioting too, because they want to be a part of that movement. Whether that movement's legitimate or not, that's not my argument here. But the idea is maybe there's concern, and the dollar rallied up into that. And we'll see on Sunday. Does it gap open higher? If a gap open higher occurs, and we're going to have to weigh that out and maybe consider that there is something on the way that sends the dollar higher. But right now, I'm not convinced of it yet. Okay, I'm willing to concede, next week, should this thing go higher, that I'm wrong and that I was reading it wrong. And that's fine. It's no big deal. My interest is not in the dollar right now. And I'm getting students in both the YouTube community and also in the mentorship here. Can you spend more time back on Forex? I would love to spend more time on Forex, but right now it's not doing anything. I mean, look what it's done this week. Dollar has done nothing. It's doing absolutely nothing. So essentially what you're saying is your impatience is overriding the process that I'm teaching you to follow. What is the process? You got to look for high probability. There's no high probability right now. Not in Forex, there isn't. So where did I take your attention? Over to indices. But ICT, I don't want to trade those markets. I want to trade Euro. Even though it's going sideways in a snail crawl and can't break up its range, I'm forcing myself to trade that Euro. Do you see a problem there? Are you really allowing yourself to be taught? Or are you forcing your will on the market? And are you trying to impose your will on me as your teacher? You do what you think is right for you and learn the lessons from it. All I'm doing is promising what I said I would do, which would help you navigate these markets. The clearer technicals are in the indices. Now, whether you choose to trade them, practice them, study them, it's completely up to you. You can waste your time and not do it, because the reading of that price and the examples I'm showing with it are going to be helpful to Forex. For those of you who are only going to be trading Forex your whole entire career, you're never going to do anything else. That right there is your decision that stunts your growth, not mine. Just because you're unwilling to trade these indices doesn't mean that you shouldn't at least engage with the ongoing study of them, because it's price. It's the same thing that these markets are going to do when they're able to give us something that's more solid, more trustworthy, and also more predisposed to have a movement of significance. I'm not saying they're not moving. They are, folks, but there's just tiny little movements. So if I'm going to be the best instructor for you, wouldn't it be best for me to say, okay, if these markets are going to be quiet right now, let's do nothing. Let's just wait on your hands. Don't do anything. How long are you going to put up with that? not many of you would be able to weather much of that. So I'm taking your attention over to markets that you can study that are moving around, very liquid. There's lots of range in them, lots of setups that you can study. And if you're not in the United States, you can be studying them through the US 100, US 30, and US 500. I don't know why there would be an argument about it. When these markets start loosening up again in the currencies, we'll be right back in that again as well. But don't try to twist my arm to do something that you think is better for you in the learning process when I'm telling you, if you're in this to learn how to trade and to speculate, I'm teaching you where to find those money moves. Don't wrestle with me. You're just going to stunt your growth. You're slowing your progress. And I'm going to do what I'm going to do regardless. Because I'm chasing the money for real. So I want to be in there where the moves are happening. I don't want to be in a slow, consolidated Forex market, which, no, I don't believe it's going to stay like this. But you got to give it time to loosen up. So you have to go to where the money is going to be seeking yield. Money will always seek yield. That means investments are going to be constantly moving out of one asset class into another. And if it happens to be the asset class that you love, that they're leaving, you either have to adapt or be extremely patient. Okay, so there was a time when I wanted to trade bonds, and they were just trading in a tight, narrow consolidation, and I just beat my head against the wall. I lost a lot of money trying to force trades in it. It's a loser's mentality. Okay? So the only thing I'm trying to do is keep you positive and teaching you how to navigate and adapt. If one market asset class is slow and is lethargic right now, why waste your time and your money being tied up in a slow asset class when you can go into an asset class that's offering you magnitude, velocity, those movements that you really want to see Forex deliver, but they're not right now in a position to do that. No matter how bad you want that to occur, that's not what's likely to happen right now. So again, just a gentle reminder, I'm teaching you. I'm proving it still works. It's just in another asset class. When you went through core content, didn't you learn about commodities? Wheat, lean hogs, live hogs. You're probably listening to me in those teachings. You're like, what is this? Hogs? I'm not trading hogs. But those markets make money. There's opportunities for them seasonally every year. So again, just keep your mind open to opportunity. If you close your mind to all opportunities except for the one you want to look at, that's like just looking at one tree and failing to see the entire forest. So we'll see what we get on Sunday's opening, but I'm not convinced that this is going higher at this present time, but I'm willing to be corrected next week. On the hourly chart, you can see we spent most of the last 3 days or so in consolidation, and then we had a little bit of a run up in here. Buy side was here. I don't like this high here because we had a nice slam down and it came right back up and then redelivered again. So all of this range, in my opinion, is balanced. So if it goes above this high, then I think it's a more meaningful rally that's likely to occur. But I think this area here should, and I could be corrected and proved to be wrong, but I think this should stave off any advancements higher. But we'll see. Preferably, I'd like to see it gap down lower and no event take place over the weekend. Canada just settles down and Ukraine doesn't get invaded and we get a gap down and the dollar fills the gap and then trades lower to take the sell side out and then resume going down from here. That's what I'd prefer to see, but I'm just a guy in the charts that I don't really control the price. It's just my expectations and what I'd prefer to see. Dollar index, 15-minute time frame. Consolidation in here. A little bit of sell side liquidity taken. Then it rallied above. Nice swing high. Fair value gap there. Trades down into that and starts running for the buy side. Was I watching it? No. Do I feel bad that I missed this move? No. I'm not interested in it because, again, the velocity and magnitude of the moves that I like to look for and have at my disposal are really occurring daily in the indices right now. And if they start to slow down, those ranges will contract and another market will start getting, busy. So that's asset rotation. You're going to be able to navigate and move and chase yield just like all smart money does. Okay, investment banks and large investment firms, hedge fund managers, those types of people, they're not one-trick ponies. They diversify, yes, but they specifically specialize in the hot asset groups at the time. And they navigate back and forth, which is what I'm teaching you and I'm showcasing. So, again, follow my lead and you'll be a better trader for it. Eurodollar, you can see, really take this in. The middle of November to where we are right now. This thing's asleep. And I'm reading folks in several of the user groups. They're frustrated because they're trying to trade this pair. And it's slapping them around. It's not left its range. It's not doing anything. So, with that, just be mindful. Do more of a back testing approach to what it's already done. Try not to be trading in this because it's probably going to hurt you. You're probably going to do it wrong. And honestly, if I was trading it, I'd probably have more stop outs and incorrect decisions too because of its lethargic price action right now. I might want to see a larger move, which at the time right now, and proof of this is because I'm not worrying about Forex that much. I'm in the indice markets. That is a testimony. My interest is not here. If it's not here, what's it tell you? It's not likely to be moving. Have I put any kind of special attention on this pair? No. And cable as well. I haven't been interested in that one either. But here's Euro. Lethargic. Sloppy. So we have the likelihood of continuation sideways in this pair. Nothing in this chart has my attention. I don't look at anything and say, oh, I think it can go here, or I think it can go down here. I don't know. I don't know what the euro is going to do because it hasn't had some energetic movement and then set up a framework that makes sense to me. So I'm leaving it alone. So try not to be overly aggressive and trying to force setups and looking at, well, this is what ICT teaches in here and this was right here. Look, I'm not expecting this pair to be moving based on what it's doing right now. So don't put words in my mouth and say, well, ICT said this other time. That other time was for that time. You have not heard me say, trade euro, expect this, expect that, look for this, look for that. I don't know what it's going to do. I don't know what this pair is doing at the moment. It's consolidating. So we have to wait for more money than ours to have a vested interest in seeing it go somewhere. And when that displacement comes in, it'll usher in smart money. And then we'll have that tap dance between the banks and large funds. And then we just ride their coattails. 15-minute time frame euro. Nice little move in here. Breaks the swing low here. Comes down. Little imbalance comes up. Fills that. Breaks again. It just works lower. So it did offer, what is that, about 50 pips? They're about 50. So that's not bad, but I'm not interested in that move. You might look at this move and say, and you maybe have traded it. And you caught that and like, man, this is great. I feel great. Don't let me and my opinions about what euro is like for me right now, I don't want to touch it. But if you engaged in this and you took pips out of the market, it doesn't make a difference what I say. The only thing I'm trying to do is, number one goal is to protect you as my students first, because I want you in the game long enough to learn to overcome the problems that you're bringing into it, because everybody does that. Pound dollar, nothing. Just back and forth. It's literally stuck in the middle of the range from this high and that low, doing absolutely nothing. Just chopping. That's all it's doing. Hourly chart. Oh, but ICT, look, it's got a fair value gap here, came down, optimal trade entry, this high and this high. It ran through that. Yeah, I'm not suggesting that it's going completely flatline. It's moving a little bit, but not to the degree where I'm going to say, you know what, I would like to put money behind that, when I have something else that's saying, here is $2,500 for you. This is something that will give you $1,500 and it'll happen in 10 minutes. We're not going to be able to compare Forex right now with that. And at some point, it'll reverse its role. Forex will get really big, and indices, while they will still move, they won't have all the excitement. Because right now, everybody is feeling that concern. What about my 401k? Is my investments and is my retirement safe? I don't think they are. But I'm biased because I don't really invest in 401ks like the average employee that works at a job and puts their little bit of money in that they can maximize each week with, and then their employer matches that with whatever percentage is, and they subscribe to that for a whole lifetime of while working as an employee, and hopefully the gains are an average of 12% each year for stock performance. I don't subscribe to that. Okay, so the idea of one asset class moving from the exciting front runner to a lesser exciting asset class, another one will take its place. Crypto, remember what happened there? Everybody was starting to think, wow, I don't want to trade commodities and futures. I want to leave this and I want to trade crypto because crypto is moving thousands of points in an hour. How are you going to compete with that? In a gambler's mindset, you can't. They're going to chase that new high because that high is real good. You're either going to submit to this process or you're not. If you're not going to submit to the process that I'm outlining for you, at the very minimum, exercise patience and try not to send me an email and try to coax me into doing something that I don't believe is the most appropriate way of teaching you. See, what you want and what you need, I differentiate that. As the tutor, the teacher, the instructor, the mentor, I know where you are in your expectations. I know where you are. But you don't know how these markets are shifting. And one asset class is rising above another, and contraction is being seen in the very asset class that I started this mentorship with. But again, as a reminder, we're not one-trick ponies here. Even in the core content, I taught you stocks. That's going to be rung in as well. Options, same thing. They're just asset classes that will be utilized at the most appropriate time. Mega trades, I'm watching these markets get ready to set up. When those occur, my attention will be there too. But right now, Forex is just not moving enough that makes sense to be taking your time up with it. Study the markets I'm providing the commentary for. British pound, US dollar, 15-minute time frame. Again, nothing in here excites me and is noteworthy for me to talk about. But it did move. I mean, it had a nice little run above the high. But nothing in here, it's real sloppy. It's almost completely balanced here, so there's nothing there. It's all balanced and tight in here, nothing there. Now, I'm sure if we drop down to a lower time frame, I'm sure I can find something, but the 15-minute time frame is my bellwether chart, which we'll talk about later in the video. All right, NASDAQ 100 E-mini futures. This is the continuous contract, the very first one. If you click on TradingView, type in NQ, and you click on the header for it, The first one, that's your continuous chart. That's what this one is, okay? I mentioned in, well, now several discussions about this indice. Our imbalance here, premium high, discount low, and I apologize, it should actually be right on this high. I'm not sure why it's not there, but the market banged around inside here. I mentioned to you, and I also made it public knowledge on the YouTube channel, that we're looking for it to eventually gravitate down to these lows here. But up here, we were looking for this low next. Not higher, this here. Now, in the commentary I gave on Wednesday, I mentioned how should we trade higher? Go back and watch this video again, because I have not seen any emails, okay, but maybe it went over your head. Go back and listen to it, and I was talking about a potential market maker buy model. And I mentioned a certain area on the chart that it needs to be paid attention to. In other words, it needs to go a little bit higher, and then compare that with the left side of the chart. And if it accumulates there, not down in here, I don't want to look at this and say, I'm going to buy this down here, because this whole imbalance here fits the narrative that it's selling off. So I'm looking at this low, high, low, sell off, distribution, second stage distribution forming somewhere in here, and then attacking that and going probably even lower than that. But I don't look at this area here and think, I'm going to buy that because it makes sense. What makes sense about it? Nothing. Not for a buyer. So it's extremely heavy. It showed its hand here. It traded right back up into this area here, rebalanced, offered buy side. Now it can trade lower, and lower it did. Where did it target on today's trading on Friday? Sell side liquidity resting below that low. So be mindful. This level and this level is this imbalance, and then we have a thin green line that is this daily low right here. Okay. All right, so the hourly chart, premium high, discount low. We left it on the 17th. We popped up right on side over here. Fair value gap, see that? Extended out in time because we are not supply and demand. Sorry, Sam. Accumulates, runs back up, rebalances. Look real close. Down movement. Next candle inside the range of this candle. Next candle, down movement comes off of it again. Down movement. So this has been traded back and forth. So we should not fear the market trading above this candle's performance, because we've back and forth, back and forth, back and forth. So at the highest, it's this candle's high here that is likely to see it retrade to. But this low here is about appropriate for it to retrace back into. I don't have a line on it. You do it for yourself. Extend it out in time. It consolidates in here. Now everyone else, they're going to have harmonic patterns on this thing. They're going to have the low to high. And they're going to do all kinds of like bat patterns and butterflies riding them on the backs of robins. It's to me, it's a religion. But you know, God bless their hearts. If they want to believe in that stuff and it makes them money, and it ain't the catalyst that made them money. It's just that's just randomness that lined up in the fate. So we have the market rally up. It consolidates, and they're thinking now, okay, this is probably a bull flag. And we got some kind of deep harmonic retracement. They watched some guy on YouTube talk about how relative equal highs. So there's buy stops up here. It's probably going to run up there and keep on going. No. It bounced where we would expect to see it bounce. Rebalance to where we would expect to see it rebalance. Break lower, accumulate more shorts, and then break down into the sell side liquidity resting below that low right there. The opening at midnight, we rally above it just a little bit. Power 3, what are we looking for? Lower delivery. Aiming for what? That low. See, I'm really enjoying this because all of you are tired and bored of this stuff because I talk about things and it comes to pass. And that's how it should be. It's what you would expect, isn't it? If it's going to repeat, if it's something that's valid, it has some measure of substance behind it, all of these concepts I'm teaching, if they're real, you're going to know they're real. They're going to do exactly how I teach you, to look for them and to anticipate them performing as I teach it. And they do. The public is now seeing the things that I outline, and they're like literally, I'm half tempted just to burn the trolls and let all my comments open on the videos, because they're like, what in the world? Like, yeah, they are seeing what you get to see. And I'm just sprinkling it out there. I'm not going to just full blown go out here and talk like I talk with you. You're the group that has that privilege. Out there, it's going to be once in a while, I'll show something and they lose their minds over it. That to me is fun. All right, the 15-minute time frame. This is the bellwether chart. Okay, this is the one that you want to have your framework on. Now, your bias is not determined by this time frame, but your framework for the trade starts here on the 15-minute time frame. At least it does for me. You may choose to do something else. It's your model that you're building on. You're not trying to copy everything I do. Not just you can't copy the models that I've provided for you, but I'm hoping that you'll have some kind of unique twist and bring your own personality and flair into your model. But it's my concepts, but you're making it yours. So that way you feel close to it, you resonate with it, and you don't want to trade outside of its rules and parameters. That's solid. That's maturity. That's what your goal is. You're trying to develop a model where you can trust it. You're not enticed to do something else because your model didn't give a setup. But you have to frame all of that trade framework on this 15-minute time frame, because your trade's either going to be successful or fail with this time frame, in my opinion, because it's like a bridge, a portal that takes you into day trading, scalping, if you want it, but it also takes you into really high precision entries for short-term trading, swing trading, and position trading. That's what makes the 15-minute time frame the bellwether chart. Period. All right, so we had that opening price here at midnight. Blue dashed line here. That's that opening price at midnight New York time here. Power 3 opens, rallies, small little rally, and then displacement. Trades completely over top of all of this here. So with this imbalance here, we have one pass, and now, yes, on a 15-minute time frame, we have two candles that make that pass, but they're continuous. Because they're broken, there's like two steps to it. It's 1 and 2. This part of the imbalance, it would be over here. About 50% of that. Remember, I teach balanced price ranges, which would be what? The middle, right? The middle is kind of like that line in the sand. It shouldn't go past that. And you can see that element occurring here. We have an imbalance here. This high below old lows. It should not fill. What that makes is a institutional order flow entry drill. Bam, bam. Shallow little run up. Then go lower. The opening price at 8:30. How many opening prices you got, Michael? Well, every candle has an opening price. But for narrative, I'm looking at the daily range at midnight. Then inside that context of that likely down close candle forming with expansion lower, I'm going to be expecting that same fractal formation occurring at the 8:30 hour. It opens, rallies up, trades into what? A premium array. What's it form? Institutional order flow entry drill. Sells off, comes back up one more time, pumps it above the opening price here, and then sails down into the sell side liquidity resting below that old low, again that green level here, and digs in deep. Look closer. One low consolidates. Two lows, lower than the previous, yes. Retracements back up. One more pass down, swing low. 1, 2, 3, below sell side, time of day. We're on the other side of lunch. It's on a Friday. We've already come down a lot. It's likely to reverse in the afternoon. Don't stay short and ride any of this because they can really send them. Like you see it here, we get right back up into that old imbalance, the fair value gap. Deep retracements. You don't want to ride that out. All right, so 5-minute chart on NASDAQ. Institutional Ortho entry drill. Look closer here. Now, these are the times where I speak and some of you just don't want to listen. You're not paying attention. You're distracted, or you're looking at charts or something in this chart. And you're trying to figure out, why am I not talking about this? Or why am I not talking about that? The reason why I'm not talking about that is because it's not important. I'm taking you to the part that is important. You want to get to the point? I'm getting to the point. But I'm hammering it down with the reasons, the logic, the why. Why should I be concerned about telling that part to you when you think I should be talking about something else in the chart? Well, why didn't he take the trade here and here and here? If you just listen, I'm telling you the reason why these are the more important ideas. Because you're going to engage the market and you're going to have these things occur. And yes, I see those other setups, but I'm not concerned about them. We have a swing low here at 830. It rallies up into the institutional ortho entry drill here, sells off. Now, you're going to say, there's a fair value gap right there. It broke a swing low. It broke this swing low. So if it goes up into that, we can sell short, put our stop loss right there. You can. You can do that. And in this instance, you are potentially stopped out. And then it does this. The economic calendar today at 10 o'clock had leading index and existing home sales at 10 o'clock. Look what it's doing. Low, high. Lower, low, after this high is taken out here. Then, right before 10 o'clock news driver comes out, the leading index and existing home sales report, it pumps up one more time just to nudge that high. To do what? Stop them out. Then it breaks down. If you would have got stopped out here, here's your fair value gap. If you were looking at the economic calendar, you'd be waiting to see if they're going to send this thing up to give the imbalance after the medium impact news. You have to consider that economic calendar, folks. You just can't look at the chart and say, well, I'll see it coming. If I don't look at that economic calendar, folks, I can be caught off guard too. So we see it break down, creates an imbalance here. We don't need to see this low taken out because we've already seen the manipulation here. But ICT, you're on your YouTube channel. Exactly what you just said. On my YouTube channel, I'm teaching one independent approach and model for them. I have lots of models. What you're using to structure your setup, your trade, that's your choice. That's the part that it's the hardest thing for you as a student. You need to figure out which one you're comfortable with. And if you're looking at every single model that I can make available to everyone, and then I can trade them too, you're going to constantly be in perpetual chasing. What's the next one he's going to give? Like a crack addict. Like, you want something new. Oh, give me more, give me more. And you're never settling down with one model and getting good at it. You have enough in this mentorship. If you're looking at what I'm teaching them that's stripped down, it isn't going to be so high end like it is in here. It doesn't need to be high end to be profitable. But I'm giving them the easiest way to qualify and confirm a fair value gap, because they're not learning all the supportive lessons that you have here and ongoing narrative and what I think is going to happen in the market. They don't have that. That's why I'm teaching them the model that I'm teaching them there. It has to break a swing low, and between the displacement low and displacement high, then they're looking for the fair value gap there. That's not the only formation of a fair value gap. That's not the only qualification for a fair value gap. It's the qualification for the fair value gap for that particular model that I've given them on YouTube. That's my daughter's model. Okay? I've literally laid what I've given my daughter to the world. If I believed by me teaching it, it would stop working? Would I have done that? No. So please stop sending me emails asking me, do I think these things are going to stop working because I'm making them mainstream? Listen. Speed limit signs are mainstream. How often do they get followed? Right. So, fair value gap, where is it forming? Above the opening price at 8:30. Open, rally, manipulation, high of the session. Breaks down, entry. If you can't sell it here, maybe you can't. I understand, no problem. There's your setup there. Sells off. Institutional order flow, entry drill here. How do you know that? Because the imbalance is below. There's liquidity here. Don't expect that to close in. Retail thinks double bottom, that's support. Wait for it to come up here. If it touches that, I'll sell short. They're not going to let them do that. Without them. Right down into liquidity. Okay. All right, let's go over to a concern that came up in one of the user groups. I saw a thread created by a member. And let me just state this as plainly as I possibly can. You're welcome to ask if you have any concern or misunderstanding, or you just don't feel like it's making sense if I said something in a video, or if I say I took a trade here and I haven't yet proved I took a trade, okay, or any doubt, okay, any concern or just shortcoming on your present understanding, please do not title your concern or question or thread with the words cherry picking. That's something that I would expect in a YouTube comment from someone outside this mentorship group. If I read someone say, there's nothing really else I can call this except for cherry picked. Like I sat over the chart and said, well, I'm going to find the best one here, and there it is. I'm literally proving executions now. I cover the market. I outline it before it happens. I don't need to cherry pick anything. I know where the cherry is. I know the one I'm looking for, and that's the one I'm going after. I don't need to go through the charts and find something that makes me look good. So please, you're welcome to say, I don't think the explanation on this setup was adequate for me. You know what? That's a respectful inquiry. I would not read that with a backhanded insult, because that's how I take it if you say cherry picking. That, to me, quite frankly, just pisses me off. So I went at the student in the forum, because that's where it was posted in that individual user group. And I said the same thing, basically what I'm saying here, but in a little bit shorter version of it. But I want all of you to understand there's a way of asking for my assistance, and I will absolutely give it to you. That's what we're going to be doing in the forum, April going forward. That's where we're going to be engaging. You'll be in there talking directly to me. My staff won't be talking to you. It'll be me. So when you ask me questions, just be respectful. That's all. I expect you to not understand something the first time, or maybe a couple times looking at it. But don't use the terms cherry-picked, because that to me is a connotation that is linked to fraud. And I don't need the fraud, okay, anyone. I can do all this stuff for real. So with that said, the concern was, in the Wednesday video, I think if you pick it up around the 44-minute, something in that effect on Wednesday's video, about 44 minutes, 46 minutes, in that area. I apologize, I don't have the exact time, but you can find it. All you gotta do is go into that area and just watch it. You'll hear me talk about this area here and the 15-minute time frame, how there is no 15-minute time frame fair value gap in here. because there is no 15-minute time frame fair value gap there. What I don't have on a chart, but you should already be looking at because you've been trained to do so, what time is this over here? It's midnight New York time, okay? So the opening price of that is what? It's the New York midnight opening price. If we're trading at the premium high of the fair value gap, this is the discount low of it on the daily chart. If it trades up from the opening and hits that and trades down, has it taken out a swing low here? Yes, right there. That's a swing low. It's taken it out. But there's no fair value gap here. We're not looking at this open to that high and saying, oh, there's a fair value gap right there. There's nothing fair value gap at all here. Nothing. It's not there. Also, what time is this candle? It's after 5 a.m. That's dead time. We're not even in the beginning of the New York session yet. It's not even there. So the absence of any fair value gap inside this area here, this little pocket of price action, anywhere from here all the way up here, there's no fair value gap. It's not there, folks. This is a fair value gap. This swing low gets taken out here. There is a displacement. This movement here, where it drops down, and this wick right here, this drop down, I don't care if you go down to a lower time frame chart and you look inside here and you say, oh, well, look, there's a fair value gap on a 1 minute chart here. I'm not looking at that. Why? Because these two candles are too close to one another and they've overlapped. Watch. The market on this candle opens, trades down, then trades back up and creates a wick. That's a gap. Then this candle trades down over top of it. And now we're in post 5 a.m. We're not interested in that. So yes, it took a little swing low out. It's still above the opening price, yes. But now we're in a time of day where I'm not interested in that. That was what I said. I'm not interested in anything here, and there's no fair value gap in that area. So fast forward, we have a displacement here. This movement right here, it takes out a swing low. Right there. Does it with this swing low? And this one here gets crushed. Is that obvious now that there was displacement? Yes. Did it have a shift in market structure? Yep. Went below that low. And now we're entering what? The beginning of the 8:30 crosshairs time, where here is 8:30. So we have the gap. The market rallies up above the opening price. It's 8:30. It fills it at 8:30. It's obvious it's there. So this is the one you want to be trading. Nothing in here. You have to go through all the details that you've been exposed to. I teach time of day. There's times of the day I'm not interested in taking a trade. I'm not interested in it. I want to be in there where the volatility and the interest is going to be the highest. When is the algorithm going to be repricing and aggressively moving away or going to a specific level? The times I tell you it's likely to do that. 8:30, that's where you start to anticipate it. And it gives you the setup and the delivery to it right here at 8:30. Then the fun ensues. So I understand that I'm going to say things. I may say something that is completely omitting a portion of the commentary, which I have done this before. I've mentioned part of an idea or a reason why I've elected to do something or not do something, and had in my mind, I'm going to bring more clarity about that in a minute. But let me talk about this very thing here, and I miss it. I don't come back and finish it in. But invariably, those instances come up in an email, and then or post on a forum, and I'll answer it kind of like this, but not as so pointed as I'm doing now because I was offended in the way it was delivered in the forum. So all I'm asking is the person that made the post to comment that they are satisfied with what I've answered here. I'm not asking for anybody to bend over and, pay homage to me and all that stuff. You don't even need to apologize. Okay. What I've said, I think is fair. And what I'm expecting from all of you, I think is reasonable. But just acknowledge whether or not this was a satisfactory inquiry being answered. And then I'm going to close and delete that thread because I don't even want to see it on my forum. So I think that's going to be it for the weekend commentary. I will touch base with you, obviously, on Monday. And there'll be some lessons. No commentary on the market. Will not be touching commentary at all. I have a couple of things I want to nail down before I take the month of March off. In case you have been under a rock and not paying attention, I will not be doing any videos. No posts to the forum. Do not panic. Do not be afraid. There's nothing happening. I was not abducted. I didn't skip town. I'm literally taking a break. And please do not send me emails because nobody's answering them. There's no administration help doing anything with the emails. It literally is going to be unplugged for the entire month of March. It's just a holiday. I need it. My family needs it from me. In the 1st of April, I'll be right back at it again. Okay. And we will be busy in the forum. The 28th of February, which is not this coming Monday, but the following Monday, I will be giving you instructions on what to do the entire month of March. So that way you'll have all kinds of homework. So it's not like you're taking a vacation too. I'm going to be giving you things to keep you engaged in learning and staying close to the marketplace. And that way when I come back, we'll review some things and I think we'll have a better time on the other side of March because I'm needing it. I need a break. The holidays around Christmas time wasn't enough. It wasn't enough. So hopefully, you have a nice weekend, and I'll talk with you on Monday. Be safe.